SCHD, the Schwab US Dividend Equity ETF, is one of my favorite ETFs that I've been buying now for several years, and by basically purchasing a share or so of SCHD during every single trading day over the past several years, I'm now officially up to 648 shares of SCHD across my portfolios, which is not only super exciting, but at this rate, I will be hitting my 1,000 share goal probably within the next 12 or so months. Now in this video, we're going to go over the Schwab US Dividend Equity ETF, and we're going to talk about exactly how much money an investor in 2024 would specifically need in order to cover all their expenses and potentially retire, maybe even retire early. And we're going to go over some of the math very closely because there's a specific metric that is very, very important when figuring this out that a lot of investors overlook. So if you're a dividend growth investor looking to use SCHD as a long-term retirement tool, just like I am as of right now, make sure to stick around, drop a like down below, and let's get right into this one. I have some huge news for those ready to get serious about their dividend investing journey. I'm opening just 5 spots for one-on-one investing mentorship from me. I am a self-made 7-figure dividend investor who earns just shy of $7,000 per month in dividends at 31 years old. With this mentorship, you'll receive things like stock ideas, stock alerts when I buy and sell positions, access to my entire portfolio in real time, and I'm even more than happy to review your portfolio. You'll also receive my custom dividend tracker and A to Z dividend investing ebook for absolutely free. Like I said, this is only for 5 investors ready to take action, so don't miss out. Now, before we go over the exact math, I share with you one of the most important metrics when trying to figure out and plan exactly how much money you're going to need to invest into something like SCHD when it comes time for retirement, just to go over some of the basics of this ETF. And this is in case for some reason this is your first time ever hearing about it. So ticker symbol SCHD stands for the Schwab US Dividend Equity ETF. This is a very, very cheap ETF to hold on to with just a total expense ratio of 0.06%. The ETF's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Some highlights: it says a straightforward low-cost fund offering potential tax efficiency, which is great. The fund can serve as part of the core or complement in a diversified portfolio, which is awesome. Tracks an index focused on quality and sustainability of dividends, which is huge, especially if you're looking to live off the dividends in the future. And lastly, invest in stocks selected for fundamental strength relative to its peers based on financial ratios. Also important, SCHD as of right now currently has around 100 different holdings, some of the top stocks within this ETF as of right now. And again, these are going to change around over time, so keep in mind. But as of right now, the top names are things like Lockheed Martin, we have abbvie, Amgen, Home Depot, BlackRock, Coca-Cola, we have Cisco, Pfizer, Chevron, and Texas Instrument. And more or less every single stock within the portfolio that SCHD tracks are all stocks that, again, not only pay dividends, but have been paying dividends for a while and also have a history of paying more and more dividends over time, giving the SCHD ETF a massive dividend growth rate, which is going to come in very handy when it comes time to retire. Which brings us right into the most important portion of this video. We're going to talk about exactly how much SCHD you would potentially need to buy in order to retire completely just off of SCHD's dividend income in the future. And again, it's probably not as much money as you might think. So going over some of the stats, some of the historical stats at least, and of course these things can change in the future, keep in mind, but right now SCHD is offering around a 3.5 more or less % dividend yield trailing 12 months. So that means right now, more or less, if you were to invest $100 into SCHD, you would probably get paid more or less $3.50 in dividends per year. Now, the interesting part of this, and this is where the math gets kind of crazy, is even though, let's say, you invest $100 in SCHD today, and you get paid around $3.50 per year, because of SCHD's dividend growth rates, or how much more in dividends year over year this ETF has been paying investors. And I'm going to show you the chart here in a second to give you an idea. Over the last 12 months, investors are now getting paid around 9% more in dividends year over year. So let's say 1 year ago you were getting paid $3.50. That means 1 year after that you no longer are getting paid $3.50. You're now getting paid something around, let's say, $3.80 or $3.90. And historically speaking, SCHD, like we talked about earlier, has paid more and more dividends over time. To give you an idea, in the last 5 years, 12.88% more in dividends every single year. On the last 10 years, 11.01%. Now, at this point, you're probably understanding very clearly why this is such an important metric, especially when trying to figure out the math, trying to come up with a figure, a number of how much you have to invest into something to live off the dividends in the future. It's not necessarily going to be an easy task right off the bat because you really have to look an ETF, for this example, has paid and try to figure out long-term into the future how much cash flow you're going to get paid later on. So for a very quick example, back in June 22nd, 2014, around 10 or so years ago, an investor that bought into SCHD, this same exact ETF back then, was receiving around 27 cents per share per quarter for every single share that they owned. Now, for that same investor, if they were to have just held that share throughout the years, 10 years later, they would have then 10 years later received an 82-cent dividend from holding onto the same exact share that they held onto 10 years ago. So an 82-cent dividend is basically 3 or more times more in cash flow than that investor received 10 years prior. So now you can sort of extrapolate out and figure out that if you invest into ETFs or stocks for that matter that have a high dividend growth rate and that have been paying more and more dividends over time, especially stocks or ETFs with substantial dividend growth, your money, even if it's not necessarily all that much money, your cash balance is going to be stretched a lot further. Which brings us into the most important portion of this video. I want to see exactly how much money you would potentially need in order to retire off dividend income alone when it comes to SCHD. So let's go through a few different examples. For this example, let's go with a $10,000 portfolio and invest into SCHD today, which is offering again around 3.5% initial yield, around 11% annual dividend amount increase, which is what we've seen in the past during certain timeframes. Now, we don't exactly know if SCHD or if any stock or ETF is going to continue to pay more or less dividends over time, but just going off of when SCHD was on a hot streak, going off 11% just to show you how much this could turn into in the future. An expected annual share price appreciation around 3%, 30 years invested, a $5,000 annual contribution on top of this. So this is saying that you're starting with $10,000, but you're also going to buy another $600 or so of SCHD ongoingly. And again, we're going to go through multiple different scenarios. Now, if we were to start this $10,000 portfolio, your number one, you would earn around $354 in dividends. So again, not enough to retire off of, not even close. But with that $10,000 portfolio, and again, reinvesting around $5,000 on top of that per year, and reinvesting the dividends over time, it would take about 18, 19 years until the portfolio was earning around a stable $30,000 to $40,000 in dividends. And by 30 years down the road, if you just kept compounding the portfolio, and if SCHD just kept paying more and more in dividends over time, again, who knows what's going to happen, you could see $893,000 in dividends and a portfolio that's going to be worth around $3.4 million by the end of year 30. Now, a much smaller scenario, a $10,000 portfolio with just a $500 contribution per year. So this is for those investors that don't really want to buy much more SCHD, just a $10,000 purchase and then maybe eat a little bit more throughout the year. A much smaller expected annual dividend amount increase of 8%, but still 30 years invested. Let's see what we get here. So if an investor was just to invest $10,000 and only add in around $500 per year, reinvest the dividends along the way, it would take about 30 years to get the portfolio to pay around $31,000 per year in dividends and be worth around $250,000. So even though this scenario isn't really going to allow an investor to retire early by any means, it honestly still goes to show the power of compounding and shows you how just a $10,000 portfolio invested in the right assets could potentially turn a small amount of money into a massive lump sum later on. So exactly how much money is an investor going to need to potentially retire completely off SCHD and or off SCHD's dividend income? Well, that's going to completely depend on things like how much money you're starting off with, how much money you're going to add to your portfolio long term, and of course, most importantly, what SCHD is actually going to do in the future. Is this ETF going to be able to continue to pay around 10% more or less more in dividends ongoingly in the next, say, 10, 20, 30 years, or maybe not? But either way, just going off of historical performance, this ETF, in my opinion, is one of the perfect ETFs, along with others, of course, in the markets, for long-term dividend growth investors to cash out off of the dividends day one, as well as the dividend growth long-term. But now lastly, most importantly, I want to hear from you guys down below. If you're dividend investing right now, building out a long-term portfolio, at what age do you plan on hopefully using your dividend income to retire completely off of? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.